Each new decade allows us to reflect on where we came from, what goals we've accomplished, and what goals we'd like to work towards achieving in the years to come. 40 is one of those fantastic milestones to establish as your aim for certain financial accomplishments, and it should be one of your primary goals to reach this age. But what financial goals should you have accomplished by the time you turn 40? And what should you do to catch up? Without further ado, let's get started. 1. Establish an emergency fund. If you're thinking about financial goals, there is a high probability that you may have had to use money out of your emergency fund to get by financially after suffering a loss of employment, a reduction in salary, or a reduction in the number of hours you work. This is exactly why you should have an emergency fund. Nevertheless, you must make up any money you must spend in this process. You have to bring the balance back up to the level. After things have settled down at work and your income is back to its usual level, you should prioritize saving money in your emergency fund until it is large enough to cover 3 to 6 months of expenses. It is critical to have a savings account for unexpected expenses that is completely funded to be ready for everything that life throws at you. Also, if you haven't already created an account for an emergency fund, now is the time to do so. You will feel a sense of calm and assurance that your position won't spiral into a financial disaster if you know that you have enough funds to get you through 3 to 6 months of difficult financial circumstances. 2. Reassess your monthly budget. Many people were forced to make hasty adjustments to the household budget after the COVID outbreak caused a worldwide lockdown. If you were forced to put some bills on hold, postpone payments, or cease donations, you must thoroughly review your budget as soon as your financial situation improves. I hope that you learned, as a result of the challenges you face, that you can live on less money, reduce your monthly food expenses, and do not require a new wardrobe every month. Instead, you should think about contributing more to your retirement account, or you may pay off your debt, which we will discuss in detail in our next point. Do not reduce your spending plan to merely serve as a tool for calculating how much money you have in your budget for additional buying. Ensure that your long-term financial goals are reflected in and supported by your monthly budget. Also, if you haven't already started a budget, now is the time. You can get more control over how your money is being spent by having a budget. A spending plan you are willing to stick to will be essential in achieving your monetary goals. 3. Get aggressive with debt payoff. If you have ever been forced to postpone payments on your debt or pay only the minimal amount required, then you definitely lost some ground in your goal to be financially free. What you should always do after this, after your finances become more stable, you shouldn't worry too much about paying off your debt. Just concentrate on cutting costs and saving money for the time being if you just lost your job, or working reduced hours, or have seen a significant decrease in your income. Then, if your circumstances begin to improve and return to a good level, you should begin chipping away your debt with every additional dime you have available. You should get back into it with as much determination as possible. When the pressure dies down and your income improves, try to avoid getting into debt again as much as possible. Also, make a new debt repayment plan just in case things do not work your way. After that, maintain your concentration on the objectives you have set. Do not let your fear of the unknown stop you from moving forward. You will be ready for whatever comes your way financially if you continue to make progress with your strategy and don't stop moving forward with it. 4. Get a side hustle. Creating additional income streams will help you enhance your efforts towards achieving your financial goals faster. You might go for a low-key part-time work on the weekends or offer a freelance service you enjoy. By generating this additional source of income, you will have more money to reduce your debt. Beef up your savings for unexpected events and improve your overall financial stability. These days, there are a dizzying variety of offline and online opportunities to increase one's financial standing. You only need to figure out what you're good at or what interests you enough to learn more about. Find out how much additional revenue you want to produce by calculating the gap between what your present budget provides and what you want to achieve, and use that information to guide your decision. After that, look for side gigs that can pay you this amount in the time you are willing to spend doing the work. Also, consider the long-term monetary goals that you have set for yourself. as well as the other non-quick money-making opportunities that are available to you. For example, if you persistently publish new content on your website or run a small online business, these endeavors can provide you with a full-time income. Before we move on, let me remind you that by being my channel's adventure buddy, you get to see all of my exciting treasure hunt videos about saving and spending. Just click the big red button that says subscribe. It's like saying yes to our next adventure. And don't forget, there's a magic link in the description that unlocks my special budget trackers. They're like super tools that make managing your finances a piece of cake. Your little coin purse and older you will give you a big high five. 5. Maximize your retirement contributions. If you're anything like most of the people who consume this type of content, you've already crossed the 20s and 40 is just around the corner. But never worry about that. There is never a better time to do anything than now. You are in the fortunate position of being able to make catch-up contributions to your retirement savings. Edelman Financial Engines conducted a recent in-depth study that found that in response to the pandemic, 50% of workers in the United States admitted that they had taken steps that were bad for their long-term financial stability. 45% of these directly damaged their retirement accounts, including changing the allocations of their portfolios, reducing the amount they contributed, and borrowing money from their savings. And these acts raised the amount of debt they had. Should you have taken out a loan or made an early withdrawal from your retirement account, you will want to increase the amount you save for retirement as your income rises. However, making up for what has been lost could take years of effort for some people. For some, this could mean postponing retirement until a later time altogether. 6. Improve your money mindset. Over the course of the last several years, a significant number of people have either lost their jobs or been forced to rely on income for unemployment benefits. Your attitude about money may shift significantly as a result of this. When you perceive that resources are limited, a scarcity mentality might set in, and your tendency to hoard may become dominant. You will have difficulties overcoming the limiting idea if your thoughts regarding financial matters originate from a place of scarcity. And once your mind is set on a thought, whether beneficial or detrimental, you might get locked in a perspective that only views what supports that idea. This can cause you to make decisions that are not in your best interest. If you have been living on less money and putting away every bit you can, your thoughts about money may have also become more negative. You could be feeling rather pessimistic or cynical about the future. The prospects open to you, or your capacity to overcome this setback and come back even stronger. It is possible that you're terrified or feel as though there's no way you'll ever be able to pay off your debt or retire on schedule. It is acceptable to feel fear. But you can't let fear prevent you from pursuing your goals and ambitions. There's still a chance for you to realize all of your goals and dreams, even though your world has been flipped upside down. 7. Live below your means. The pandemic showed us, among other things, that our likely safety in terms of finances can be compromised in an instant. You can take on more danger than you realize when you use your credit cards to make purchases and spend money you do not possess. In the blink of an eye, you can lose that steady income you've had for the past 2 decades. It occurred to every one of us. We were forced to reduce our costs and immediately end any unnecessary spending. It is incredible how quickly one can form better routines with only a small amount of external pressure. If you were put in a similar situation, hopefully you discovered that you could get by with less money. Now that your financial situation has improved, your budget is not as strict. You are back at work, and there is more money in your bank account. The main test will be how you apply the knowledge you have gained. Given your current financial situation, do not give in to the urge to treat yourself and return to an unsustainable lifestyle. Establishing personal boundaries might act as a buffer between you and unexpected events that occur in life. If you are not spending all you make or more than you make, then your income will be sufficient to pay your present costs and long-term goals. Now, as we wrap up, what triggered you the most on achieving your financial goals by 40? Which of the points will you be adding much effort to and why? Comment down below. And don't forget to leave a like and subscribe.